Welcome to the Ranchonomics Podcast, where we empower you to build a better ranch and transform your operations into a thriving business. I'm your host, John Haskell. Let's get started. Julie Davidson, welcome to the Ranchonomics Podcast, or welcome back to the Ranchonomics Podcast. I'm very glad to have you here. We today are going to talk about health insurance, so let's jump right in.
All right. Thanks for having me back. So it is the time of year to get enrolled if you're going to enroll through the Marketplace Healthcare. Their website is healthcare.gov. Open enrollment began November 1st. It goes through December 15th if you want coverage in place January 1. You can enroll as late as January 15th for coverage in place February 1. So I would say the biggest factors to consider when enrolling is have a really good understanding of what your modified adjusted gross income is. And that's pretty easy to find on your tax return. You'll see your adjusted gross income listed, and then the modified adjusted gross income includes adding back in things like tax-exempt interest, non-taxable Social Security benefits, those types of things. And if you're not 100% certain on that, your accountant or tax preparer can help you nail that down. And then I would say the second most important thing is if any changes occur in your income throughout the year compared to what you reported your income would be, absolutely call in and get that adjustment made so that you don't get a not great notice at tax time.
And that not great notice would be if you are receiving a subsidy on your premium, then you will be basically, you'll owe back premiums, right? To pay back the subsidy, basically.
Right. Or conversely, if your income is less than what you reported it would be, you may have more of a subsidy coming. And that it's not such a huge deal. I mean, it's up to you if you report it or not, if your income has lowered. But likely, if your income is lowered, you could use that extra savings. Otherwise, that will be worked out at tax time because they use your income tax form that you report to adjust that. So you would get that savings back at tax time if you didn't report it during the year if your income lowered.
Okay, fantastic. So we've got our modified adjusted gross income. Now, where do we go from there?
Well, I would recommend calling to enroll. And it is a bit of a wait. I would say probably their average wait time is 30 minutes. I personally don't recommend going through a broker for this service. They're going to do the same thing that you can call in and do. And you're kind of somewhat skipping the middle guy. I don't recommend trying to do it online. There are a lot of ambiguous terms and questions that may not be worded really clearly, and you really can't ask anybody, if you're trying to muddle through it yourself online. I have just found it very easy to call in for my personal coverage and my adult kids. I help them with it. Just call in and get a person that specializes in it. And that, for me, has been the best route to go. They are available 24 hours a day for a phone call. I will tell you, the normal business hours folks are a lot more versed and a lot,
interesting.
I don't know if I want to say qualified or not, but I've had a much better experience if you do call kind of between that 8 and 5, even on the weekends. But the normal business hours seem to be the most helpful.
Okay. Now, there's some variation state to state in this, right? Because we live in Wyoming, which did not adopt their own marketplace system, right? So when we call, we are calling a federal person, basically, right?
Correct.
Okay. Whereas other states that have their own marketplace set up, you would be calling someone in your state, right?
That is my understanding. We are very limited in Wyoming with the plans, with the companies. To my knowledge, Blue Cross and Blue Shield is about your only choice.
I was thinking that one company is pretty limited. That is all we have. Okay.
Yep. And there's a large array of plans, but it depends on what your subsidy is going to be if you consider them affordable or not. And a lot of people will qualify for a subsidy, and they don't think that they will because maybe they have a higher income. But if you have kids, that really helps. And be aware of things like if you are married to someone who is on Social Security benefits, you still have to report that person and report their Social Security income as part of your household, even though they're on Medicare and they're not signing up for coverage.
Right.
Because you're going to file a married tax return, you do have to account for them. That's another important note. If you are married, you do have to file a joint tax return if you're using Marketplace Healthcare.
Okay. Yeah, good. All right. Can you give us any, and I know it's complex, but can you give us some broad guidelines on sort of where the cutoff is where you get kicked out of the Marketplace into Medicaid and where you get bumped into, much lower subsidy levels? Can you give us an idea of that? Again, I know it's a very complex formula.
Yeah, and I do not have a lot of information on as far as the income levels, but I would encourage, especially young people without families, like anybody under 30 especially, check it out because regardless of what your income is, you're in a very good window of time
Yep.
for it to be very affordable for you. And especially, young people who work in ag roles that a lot of times may not have benefits. It's an excellent, excellent opportunity to get coverage in place for yourself. It used to kind of be the stigma of, nah, I'm going to just risk it. It's too expensive. I'm young and healthy and I'm going to just roll the dice. And you really don't have to do that anymore. If you do your research and get a good contact on the phone with the Marketplace, you will be surprised, I think, pleasantly that you do have some affordable options.
Yeah, good. Okay. I'll just tell you, I have been personally very surprised at what the subsidy levels are by income, that sort of thing.
Yep, me too. And look, I did find a little blurb here of information. To be eligible for premium tax credits, your household income must be between 100% and 400% of the poverty level.
Okay. And if you're below that 100%, then you get kicked down to Medicaid. Is that right?
That's my understanding.
Okay. All right. Now, the reason I bring that up, I don't know what your experiences have been. I know people personally that have, been in that income level where they're on Medicaid and they have had difficulty with providers. There are providers that do not want to deal with the Medicaid system, and having seen how the billing and pricing and all for that works, I cannot say that I blame them at all. Me personally, I definitely would want to stay out of that level of coverage.
Yeah.
Okay.
I have heard the same. I don't have personal experience with it, but I have heard it is a nightmare.
Yeah. Okay. Where do we want to go next? Do we want to talk about how do you choose amongst the different plans, companies, et cetera, once you're in that system?
Yes. And it is a pretty streamlined system to enroll. Again, my best experience has been over the phone. You will need to have the Social Security numbers of all your dependents. And of course, the general information, dates of birth, names, and if anyone has, like if perhaps a spouse has coverage available at their work, but it's incredibly expensive, you can still explain your situation and be considered for coverage under the Marketplace if it is more affordable for you than what the work benefits are. So that's important to kind of have that information. If you have work benefits and that healthcare premium is taken out of your paycheck, it's kind of out of sight, out of mind. So do a little research before you make the call, and if that's your situation, and know what that premium is for you. And then they just ask you a series of questions. They read you a long disclaimer that you're agreeing that you understand if you report anything falsely, all of the list of things that you may lose your benefits completely, your subsidy can be lost completely, all of those things.
Yep.
And it's important to know when you do call to enroll, you do need to pay. And it's easy here in Wyoming because it's, we have one person to pay. It's Blue Cross Blue Shield, but you really do have to pay that. Say you want coverage in place January 1, you need to be paying that.
Yes.
I would be at the end of December because January 1 is a holiday. So that payment made directly to them before your January 1 date. And then going forward, you can have it set up for automatic withdrawal or pay it online or whatever you want to do. And the online payment part, that is directly with Blue Cross Blue Shield. And I've had good experience with that. It's pretty easy to do. So yeah, they walk you through it. They ask you a lot of income questions. a really good thing to be aware of is if you have a tribal association or affiliation, your subsidy is a lot different than for folks who do not have that. So that's a great advantage. And then they may ask you some questions. Like if you are really needing to be budget friendly as much as possible, they will ask you for an amount, and then they will, that you're willing to spend per month. And then they will apply your subsidy, and they will put a range in to select plans only in your price range. And then if you want to say, I want the lowest deductible available, they'll search based on that request. And they can look at all aspects for you and help you make sure that you're finding the best fit.
Okay, you bring up deductible. I would like to talk about deductible and max out of pocket. Can you talk a little about that? So just to be clear, the premium is the amount you pay each month or is paid on your behalf, whether it's subsidized or not. That's the monthly charge for the insurance. And then with different premiums, just like we talked about last time with property insurance, with different premiums, we wind up with kind of different coverage levels, right?
Mm-hmm.
Okay. And so let's talk about what the deductible is and what the out-of-pocket is.
So typically you will have, we'll just use an example that I'm familiar with, a per person deductible, but then you will also have a maximum deductible amount for the family. So if you've got 3 kids and 2 adults, you will have, let's say, a $2,000 per person deductible, but your max deductible for the family is $8,000. Okay. So if you have one person that is having a huge amount of medical expenses, they may make that, obviously their portion of the family deductible. And if someone else has health issues going on, it's possible to meet that family deductible pretty easily. So the other amount to be available or aware of is the copay amount. Typically here in Wyoming, it's 30%. So even after your deductible amount is met, you do still have to continue to pay 30% of your charges. And then the last limit would be the out-of-pocket maximum for the family. And, that is a varied amount depending on your plan. I believe my personal one is like $18,000 out-of-pocket maximum. If you exceed that, which is definitely not impossible in a year for a family, then everything is paid in full.
Okay. And yeah, same. We're in the same kind of ballpark. I think we're 10,000 per 20,000 total. Very similar. There's this and I don't understand why the deductible and the out of pocket are different, but the deductible basically applies before the 30% kicks in, and then you do a share pay up to that max out of pocket, and then after that you're covered, right?
Right.
Okay. Is there a max? Is there a limit?
No.
Okay, so there is no longer any limit to what the insurance will, I shouldn't say no longer, but within an ACA plan, there is no limit to what the policy will pay for.
Well, there are limits within it, such as to specific healthcare options, like surgery or those types of limits. Yeah. If you've got an ongoing condition and you've exceeded $1 million or whatever, that I think long ago, $1 million was the cap.
Correct. Yeah.
Yeah. And that is not the case anymore.
And there used to be like an annual cap and a lifetime cap, as I recall,
yes.
Right? Okay.
Right.
So if you have brain cancer or some horrendous thing that needs to be operated on regularly, there is no upper limit. And one of I would claim the good thing that came out of the ACA is we have removed the sort of denial of coverage for pre-existing conditions, correct?
Right.
Okay.
That's correct.
All right. So if you are diagnosed with diabetes in 2025, in 26, it should not affect your ability to get insurance, correct?
Correct.
Do you have to be insured when the diagnosis happens, or does it matter?
It does not matter, to my knowledge, as long as you are eligible for marketplace healthcare, meaning you don't have other coverage offered to you and that you don't qualify for Medicare or Medicaid.
Which, if you've been diagnosed with something like diabetes in the interim, you may now not be eligible for, right?
Right.
Okay.
Well, what do you mean? You may not be eligible for what was your question?
Well, in a non-ACA plan, you could be denied based on a pre-existing condition, right?
You mean like with a work benefit plan or something
Correct.
like that?
Yeah.
Yeah. Those vary so much. I would be afraid to answer.
Yeah.
I have heard that though, that certain work plans they'll accept the employee, but if you have family members with pre-existing conditions, I have heard of those being excluded.
And that kind of used to not be the case, which is interesting. But at this point, the ACA is the backstop to that, right?
Yes.
Okay. Then how about things like there are HSA eligible plans? There are some other different categories of plans. Do we want to visit about those at all?
I have limited knowledge on those. I know the HSA is a way to lower your taxable income. You
Yes.
can contribute to that through payroll deductions and set that money aside as exactly what it is, a health savings account. And that is taken out pre-tax. So that's a good way to save. You just want to make sure that you're going to use what you put away.
So with an HSA plan, that works like an IRA or a 401k, right? You can have that deducted from your paycheck, or you can write a check that is literally pulled 100% right off your income. For 25, it was $4,300 for an individual or $8,550 for a married couple. In 26, it's going to be $4,400 and $8,750 for a married, single or married couple. And again, that is money that you put into a special account. You can use it to pay for it. It is, that contribution is deductible from your income, is subtracted from your income. It is to be used for medical expenses. That money can be invested, which when it is in an HSA type account. So I use this type of account with Fidelity. It is invested in a, fairly conservative dividend type paying stock where it, generally goes up in value, not down. And then you can also, as I understand, use HSA money for some other things in the right circumstances. So after a certain age, you can use it almost like a retirement account. It has a number of other benefits. I think the HSA fund is probably the highest leverage and most flexible of the various sort of tax subsidized retirement and savings accounts. So more flexible than a 529 education account, more flexible than a 401k, et cetera. Those plans to be HSA eligible generally require a fairly high deductible, correct?
Yes.
Okay. So you're probably in that 8 to 12,000. Go ahead.
I was just going to say, it looks like a family for 2026 would be $3,400 for the deductible.
Yeah. All right. Very good. All right. What else do we need to think about with health insurance? I guess the thing I always think about here is we have to think carefully about our needs, right? We're a family with 3 young kids, no stranger to the ER here. If you're, maybe kids are out of the house. And again, kids can be covered under the ACA up to 26. Is that right?
Yes.
Okay. And what are the things we want to think about when we're thinking about our level of coverage beyond just our ability to pay?
Well, you definitely want to take, your health history into account and your prescription use as well. That can be a really big factor. And again, you never know what's around the corner for your health when you may be prescription free right now. And in 2 days, you might be on a tier 3 drug. You just don't know.
Yep.
So you want to make sure you balance that. And a lot of people might kind of gloss over that prescription benefit when they're enrolling if they don't take any right now. But you should definitely have an awareness of what that involves and what your copay on those things will be.
Okay. Now my dad, interestingly enough, was on a drug for a while. He's, retired and he was on a drug that I want to say was costing like $400 a day for him to be on. So a prescription benefit for him is obviously a very, very important thing. He's no longer on that drug, fortunately, but it was a pretty stout deal. The other thing I would mention is with regard to prescription drugs, there are some other options, such as there are some manufacturers that offer, and I don't know why this happens, like you can sign up on their website and then they'll give you a coupon so that instead of costing, $40 a pill, they cost $10 a month. Like there are a bunch of those types of things too. And I can't think of, is it GoodRx? Yeah, go ahead.
Oh, I was just going to mention that one. They do have a pretty good reputation of cost savings and finding ways to help you afford the medication.
Yep. And I would just say, given my recent experience, anytime you are put on a medication, get on the manufacturer's website and see if there is some sort of eligibility for some sort of program. The medications I've been taking this year, that has made a huge difference.
Yeah.
And I'm literally someone who's never taken a medication before. So the idea of buying prescription drug coverage was like, well, that's silly. I don't take any prescription drugs. And then suddenly I do. So it's a big difference.
Yeah. And it's important too for folks who are eligible for Medicare. You get your prescription plan separately with that. And there's a really good resource out there. It's a website where you can put in your medications and it will find an array of plans for you to select from, basically. And it gives all companies, it'll give you a zero cost plan that maybe has a higher deductible. We'll give you a plan with a deductible, but if it's, $250, who cares when you're spending thousands and thousands on a expensive prescription? That is called, healthpilot.com.
Okay.
Is that website. I've used that a lot to help a lot of customers find the best plan, the best fit. And it really is a great tool. You basically put in your medication and it will give you the most common dosages, and then you select what your dosage is, and then it takes your information and matches you up with the best plan and no cost to it. And then it gives you the contact information directly to the company that you want to go with.
Yeah, good. Real quickly before we leave, we're recording this in early November. There has been a lot of stuff in the news about big changes, all that. Have you seen any of that? Where are we at with that stuff? What's actually going on? Let's try to provide a little clarity here.
I have seen it. I haven't seen 1 ounce of clarity, unfortunately, so far, other than keep in touch. I'm going to personally keep in touch with my accountant. That will be the person that has the best understanding of what the changes, how they apply, and, what the differences are from this year.
Yeah, good. Okay. And again, I think there are a ton of sort of scare pieces being written, about all kinds of things right now. I think I would not believe any of those, but get some real information before we panic. Is that fair?
Yes, that is fair. And one other note, I think we may not have been recording when you mentioned this, that when we were talking about the benefit of calling in to get enrolled versus going online.
Yep.
I'm not sure how it happens, but I can tell you it does happen. If you do the online method, you will have 1,000 phone calls and texts and
100%. Yes.
From every broker in the universe, I think.
Yes. And I have used that website in the past. I literally click on the website and my phone rings like the next second. And then it rings every minute after that between the hours of 8 and 5 for the next week.
Yeah.
So very unpleasant.
Yeah.
Good. Julie, thank you so much. I really appreciate this. One last point I'd like to make is that health insurance and health care are not the same. Health insurance is a wonderful way to help pay for health care, but they are not the same. And we keep getting that confused in our public dialogue. The other thing that I like to think about is that whenever we are considering insurance, we are protecting, especially this type, we are protecting ourselves against financial risk. There's a certain amount of financial contribution I'm willing to make. There's a level where it becomes really deleterious, and that's where insurance becomes important. I worry a lot about people that feel that every time they visit the doctor, it needs to be covered by insurance. I don't know if that's a great approach. My thought has always been I want to keep my medical bills from making me declare bankruptcy. It costs money, without a doubt, and I'm willing to pay the first dollars out of the pocket. But once we get past, we've mentioned a $20,000 to $30,000 limit, that's where we cap our risk. And so I want to make sure people think very clearly about what the purpose of that insurance is, why we carry it, and then think about how to use it the best in your particular situation. So with that, Julie, thank you.
You bet. Thank you very much.
All right. You have a wonderful day. We'll talk soon. Thank you for tuning into the Ranchnomics podcast. We hope this episode helped you win today. If you enjoyed this episode, please subscribe and share it with a friend.